Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel back with you guys, Joel Elconin, Dennis Dick. All right, let's get to this market, folks. We have a couple earnings here, but that's not the story of the day. The story of the day is the TLT and this inversion in the 2-year and the 10-year and the continued back and forth action. It is a good time to be a trader. So let's jump right into the charts here, Joel. Tell us, are we down? Are we up? Are we side? Well, we're probably down. If in the last few days are tell me anything, we're up yesterday. We're probably down this morning.
What about Macy's? We got to go to breaking news in Macy's here. And,
did I not just say that? What did I just say on the pre-market show? And I know nobody's listened to the pre-market show, but I just said it to you, Joel, like 5 minutes ago. It was 1925 bid, and I was like, I should just short that because this is not the day to report earnings, and the odds of Macy's saying anything good is pretty low. I'm like, it'll probably fall like $3 here. I don't know. It didn't fall quite $3 here yet. It's down $2.21. But man, I just gotta just do that. Hit it ahead on a day like this. Somebody's bidding 19 and a quarter for Macy's ahead of the print. It's just disaster looming, and it's already now. It's the disaster 5 minutes later. What was the numbers? Because I haven't read it. It's got to be.
It's not that they said something bad. They said.
Everything bad.
Everything bad. Everything is bad. The Q2 adjusted EPS 28 cents versus a 46-cent estimate. Sales of 5.
Stop. I go back again. Say it slower just to process this.
Sorry. Okay. Q2 adjusted EPS 28 cents versus a 46-cent estimate. Sales of 5.54 versus 5.55 billion. So it was a slight miss there. But here's the kicker. They cut their full year EPS guidance. It was a range of $3.05 to $3.25. Now it's $2.85 to $3.05. So they cut their guidance by 20 cents for the full year EPS.
Why don't they just get rid of the dividend while they're at things, you know?
That's coming, Joel.
What?
Don't give them any ideas. That's coming.
What's it yielding? 10% now?
Enjoy it while you can. I'm going to call it right here. This dividend is getting cut eventually. This is my opinion, but I think they're cutting this dividend eventually. The lower end guidance, it got a mess. Been a value trap forever. We have been dogging this stock for years. We were wrong when it was going up at the beginning of the beginning of this year, but we've been right here on this one for a while here now. And $17. I don't know.
I went out to the mall with Lisa over the weekend. She needed to return something. And I walked through these stores, whether it's Macy's or North, whatever it is. I'm like, who buys all this stuff? You know, they have a rack of something and it's all of the same thing and it's all really ugly. And I'm thinking, who would buy like one shirt of that? Okay. More or less a whole rack in different sizes and everything. And obviously, no one is buying anything.
No. I mean, and then, yeah. And I'm sure the tariffs aren't going to help Macy's. There's so many things working against this story. Why do you want to own the stock? I mean, people are going to be coming in here and saying $16. How can you go wrong? You could have said the same thing at 24, 20. Now it's 16. I think Spinner says, enjoy your 8% dividend, or 7.5 yesterday. Now it's 8.86. Yeah. Enjoy it while you can, because I don't think that dividend's staying.
Well, we are below the July 2010, though. If you want to look for support in here, that was 1693. We have we're trading below it. If you want a good level, a good buy level to cover short today, you want a good buy level cover short
to buy Macy's?
To cover a short.
No, why would I cover my short if I was short?
Yeah,
is that zero?
It's not.
Okay, that was sorry. I don't know if it's going to zero, but holy cow, just a disaster. If you're short this, congratulations. You have more guts than me. I won't say you're smarter than me because I've hated it forever, but you definitely have more guts than me. I so wanted to short this into the print. mad at myself. Should have shorted.
I don't know. I want to make a wager on this somehow, some way.
You're just hungry for a wager.
And
What do
I
you got?
think it's going to close above 15.5.
15.5. No, I'm not giving you that much of an edge. I mean,
okay.
it's been in the doghouse. It's crazy volume. It could bounce. I mean, who knows? Things don't go straight down, but that's a disaster. The earnings now are going to be squeezing. Like, what's the coverage here? So if we go to $2.70 or whatever they're going to make this year, it's got to be getting pretty tight to cover that dividend at some point in time. It's got to be getting tighter. So maybe they still have some pretty good coverage, but
They got some real estate, Dennis.
in the malls, in the malls, where there's all where you got all these Sears stores that are a black hole already. And you look at the Macy's, who wants those big Macy's stores with this real estate? That's a whole too. Debt is an issue. There's so many issues here. Oh, I don't even want to get started.
7.8.
So many issues here. So many.
7.8% yield. That's your Macy's dividend. 7.8%.
No, it's up. No. I'm adjusting on the fly. It's 8.99 now.
Okay.
Like mine changes on the fly. So as the price changes, my yield keeps changing. It's 9%. Oh no, it's back under 9%. It's moving around like crazy.
Okay.
Anyways.
I'm sorry. We were talking about it on the pre-market show, and then it broke right at 8:00. So I had to cover that. So let's backwards.
No, I agree. That was fun to cover.
That was fun.
I wish it would have been a lot more fun if I actually would have shorted it into the print. That would have been a lot more fun.
All right. So let's go. Jar Jar says a local mall here in Florida is so slow they can't even afford to fix the air conditioning for the mall. That's what Jar Jar is saying.
There are some malls in Florida, like my parents go down there, and they were telling me about the malls, and they're like, these are ghost towns. They were talking even about the Dillards in Florida, and they're like, there's like tumbleweeds going around in there. Now, I don't know. The Dillards that I've been to one in Chicago. It's pretty busy. So, but there's definitely issues with mall traffic. So again, we're going to say the same thing. The two sectors, you can talk trade wars, you can talk all this stuff. The two sectors that have been in absolute shambles way before trade wars even started is oil and retail. That continues. I mean, look at Halliburton yesterday. You have USO and oil taking off yesterday. Don't talk about today because it's giving it all back. But yesterday, USO takes off. Looks great. Oil's moving up. Chevron shows a little bit of life. You have Exxon showing a little bit of life. Look at Halliburton. Traded up for a bit, closed near the lows, almost closed red. On a day that oil, it is the opposite of Roku. It is the stock, oil goes up, Halliburton goes down. Oil goes down, Halliburton goes down. Just a disaster stock as well. So, but in full disclosure, I do have a short position on Halliburton. So I am talking my book on this one now, which I will. This is a day trade too, so I'm in and out. I'm always biased to short these pops. So pops up, it's like I said, pops up, I short the stocks that are in downtrends. But it's not just Halliburton. I mean, Rig was the same story yesterday. Barely green, wasn't even green. Was Rig green yesterday? RIG closed. No, Rig closed red yesterday on a day that. Well, how much was oil up yesterday?
Couple bucks.
Rig was down. How is that possible? You know how it's possible? Because these companies might not survive. When oil is up 2% and your oil stock is down, it's telling you you're in the wrong oil stock. Or maybe you shouldn't be in oil stocks altogether. I mean, the XOP was not performing very well yesterday either. And that obviously encompasses a lot of different oil stocks. 21.95, so it closed 15 cents green. It closed up a little bit. Nothing like the oil. Oil comes down here today, gives back yesterday's rally. All these things are way below yesterday's prices. So they go down 3 times as hard as they go up. These are just horrible stocks right now. I don't know if, like, I've given the arguments against oil for a long time, so I have very little oil exposure in my portfolio, but it's playing out. And there's something else happening. Maybe my thesis is playing out. Maybe there's something else happening, but these oil stocks are just an absolute mess.
What about Oxy trading down here as well? Oxy, I mean, they're all trading in the red here. And the S&Ps, Dennis, someone's just got their foot on this thing. Holy macro, we're down 40.
Well, look at the TLT. This is a fun show today. Look at the TLT. Can you believe it? It's up another $3.
It's like
I'm not. It was up like $2 or $3 the other day, but I was like, that's one of the biggest moves I've ever seen. 3 days later, I'm the same thing. Let's go another $3. Let's just go. Rocket ship mode, TLT. You know what that means? Financials have got to be, the banks have got to just be getting licked. When you wake up and the first thing you do is look at your phone and you're just groggy getting out of bed, you look at your TLT quote and you see it up $3, you know, without even looking at a bank, that those banks are getting slaughtered. Bank of America, now let's bring them up, down 3%. Goldman Sachs down 2.5%. Wells Fargo down 2.5%, the conservative one. JP Morgan down 2.8%. Citigroup down 3.25%. The XLF, which has a little bit of Berkshire, which might buffer it a bit. Buffett, see the pun? Want to see what I did there? 2.15% down. I mean, this is just a mess. So again, as the TLT continues to go up, these banks are going to continue to get hit. You know what else is interesting? Look at the chart of the TLT over the course of the last 2 weeks since this explosion. Now bring up the chart of the XLU. What do you see? I see a lack of participation.
Yeah.
The XLU is not participating. Why? That's a problem. That's nervous. So people are nervous enough to go buy the bonds, but they don't want to buy the bond-like stocks. Why? There's some concerns here, and we haven't got full bearish on this show. I mean, we've been saying fade trade, buy the dips, sell the rips, play the chop, but there's a lot of things to be really worried about here now. With the banks cratering, with the TLT exploding like it is, it's telling you there is, and gold obviously exploding. You know, risk assets are getting hit here again. They get a nice relief pop yesterday on the Trump tweet or whatever it was. Trump helping out the markets, but that appears to be short-lived. Does it bounce back? I don't know, but I'll tell you, with the XLU not participating, that is concerning to me. You know, you would think if you had told me the TLT would be up 10 points here in the last 2 weeks, and XLU would basically be flat over that period, I'd say that's crazy, because the XLU usually follows the TLT very closely, but it's not happening. So there's a certain point in time where they're just don't have an appetite for a stock like bond, or for a bond like stock.
Well, people may not be able to afford their utility bills, maybe, is what.
And what happens? I'm still ranting here.
You are. It's okay. But then I'll call you later.
Rant mode. What happens if some of these oil companies do indeed go out of business? They have a ton of debt. What happens to the banks then? This is like a perfect storm for the banks. So for all you people out there, and I've seen you guys on CNBC a lot of times, tooting the horns on the banks, where I've stayed bearish the banks. I think you can say I have not been bullish the banks. I've said it's been underweight in my portfolio. I own almost no banks. I have a couple small Canadian banks, maybe a couple through some ETFs, but like less than 2% of probably my portfolio is banks. Why? Because of all these unknown risks. We've cited Deutsche Bank for years on this show. That's one risk. Now you have the risk of these oil companies. Who's got all the bloody debt? Well, if there's going to be some oil companies that go under, and they are pricing like they're going under, that is not good news. And now the third, so if you want the third, is the TLT exploding. So how are they going to make money? I mean, they find ways. They have fees. They find ways. But there is a lot of things to be worried about in the banks. I don't want to own any banks. So you see people coming in and buying the dips in the banks. Say, yeah, we're at the June lows. Oh, it's going to rally back and it's going to come back. It's a lot of things to be worried about here in the banks right now.
They could take the money from the Fed and they could buy Macy's at a 9% yield.
Is it over 9 now? No, it's went back down to 8.8.
It's rallying a little bit.
17.
Yeah. It's
rally time. Macy's, it rallied 20 cents.
Yeah, I mean, anybody that's short this, I'll just give you your pre-market low. Your pre-market low comes in at 1662. But you know, Des, you talk like this on the show, and then we talk off the air, and I'm like getting over, and you're like, no, I'm buying. I'm looking to buy. I got too much cash, and
I have a lot of cash.
So do I. I actually looked at things because I got worried, and I got too much. But I mean, I guess never can have too much here. But how can you deploy? I thought about that rally yesterday, and I'm just like, there was no reason for that. A tweet. This market is reduced to tweets. Now what's he gonna
It's a
do?
headline market, and it's ridiculous moves all over the place. The moves are just absolutely ridiculous. It was a ridiculous move yesterday, a gift to the longs. If you're lightening up into that rally, congratulations. It gives it right back. But again, to get full on bearish here and say, oh yeah, we're in big trouble. The S&Ps have been very resilient. So I hate banks. I hate oil stocks. I tell you, the tech stocks still in the pullbacks. There's still a lot of people who want to own tech stocks. And you think about like companies like Apple with the explosion it had yesterday, up $9-10. I mean, what's it trading? You back out the cash, what's it trading? 10-12 times earnings? It's not crazy. It's got a little bit of debt because everybody talked them into taking some debt, but nothing they can't service. I mean, and a lot of the other tech stocks don't have debt, so they don't have as many concerns. I mean, this tech is still the best place to be. So, do I want to go pay 100 times earnings or, multiples, crazy multiples up for some? No, but there are some nice growth check, like still some growth check tech stocks out there, reasonable valuations. So, like I said, I've always liked Google. I've always liked Apple. I own them both. I've nibbled into some Square, which, is a little bit out of my wheelhouse because, yes, the valuation is kind of crazy, but I feel like it's going to grow into it.
But don't you think, like, when you see those kind of charts, like with Square, like a parabolic, it did go parabolic in 18 and part of 19. I mean, and I know it's different than Beyond Meat, but you could almost say, like, is the story over in Square?
No, I don't think the
You
story
don't
is
think
over
so?
at all. Beyond Meat. So just comparison purposes here, and I
For
mean,
comparison,
cap, is it priced for perfection? Square, it's priced, at 100. Yes, it was, but it starts to come in, and there's analysts that are projecting this thing can make over $1.50 out in 2021. So you start looking, you start doing the math, and you're like, it's not crazy because it's growing like crazy. So it's got $26 billion market cap. That's significant. But think about how many spots. Spencer, you've got me on this. You've been quiet in the background here. Think about how many people, how many different merchants use Square now and will be using Square. Are you? What are your thoughts on Square?
I don't know how many merchants use Square. I'm sure a lot of them do. Um, but Square is the future of retail and e-commerce, and Macy's is not.
Macy's is not, and Beyond Meat
I
is not.
think no.
Sorry, Beyond Meat is not.
Although I have to say, I'm seeing so many advertisements for Beyond Meat, it's not even funny. But no, Square is a great. Square is a retail play. So is PayPal. I mean, they're retail plays.
The better retail play.
Yeah, yeah.
I mean, yes, the valuation's an issue. Yes, it's, kind of makes me throw up a little bit when I think about, paying that kind of valuation for something. But I do believe it's growing enough that it can grow into that valuation.
I just had a thought as to for what Macy's can do because they have all these stores, right? They own all this real estate, right? I saw WeWork filed their S1 with the SEC for their IPO.
Nice.
Just sell your space to WeWork. Problem solved. Boom. I'm
25
helping.
cents
I'm
on-
helping WeWork and I'm helping Macy's.
I want to say one other thing too about the banks. First of all, we talk about technicals and we talk about fundamentals, and sometimes like the eye test is the best test. And in our area, I cannot tell you how many Bank America branches have been shut down. Seth, have you noticed that? They built a brand new building on 13 and Telegraph, and big old bank, boom, shuttered. Other one shuttered. And you know why? Because maybe it's the Square into Bitcoin. I mean, conventional bank, people going into a bank. You talk about real estate.
I mean, online banking, that's good for them though, isn't it? Isn't that kind of good for them? Just thoughts.
What, closing? Yeah.
Well, isn't it good that they're starting to, that they can actually operate and make money and you don't have to have as many physical locations? Isn't that kind of a good thing? I don't know.
Yeah, but it also could be a bad thing. It's like, oh my gosh, we're not doing as much business. We got to start cutting expenses. And you know what happens when you start cutting expenses because of the lack of revenue? That just takes you on the death spiral, like Kraft Heinz, which for full
See, I don't think these are going. I got to back up a little bit here because I really ranted a lot of things to worry about. I don't think the banks are going out of business. I don't see, the Bitcoin taking over and where this is the difference. And I just think there's a lot of other things, like they could have some write downs, some oil stocks. Are we going into financial crisis part 2? No, I don't think so. I hope not. I'm definitely not positioned for financial crisis part 2 in my portfolio. I'll tell you that much. So as bearish as I just ranted on the banks, I'm not getting full on like, oh yeah, we're going out of, these things are going to be in, trouble here. And this debt load that they've got, and, they've lent money to some bad, oil companies is going to bring them down.
That's the thing for me. That's the thing for me too. My biggest takeaway from the Great Recession is that we can never know, we can never truly understand the bank's exposure. We don't know what they're exposed
Well, it's
to.
enormous in the case of a bank run. I mean,
Right.
that's what we saw during the financial crisis. People got worried that their money in the bank wasn't safe, and they wanted to get it out. And obviously, we had a housing bubble, that they had a lot of bad houses thrown at them that they couldn't afford, and we saw some bank failures, a lot of them, and we saw some takeovers to avoid other failures. It was a mess. I mean, we were very close to full financial collapse back in 2008, and we came out of it. And what did we do to come out of it? We just inflated the bubble more. We put more band-aids on. So could that happen again? Absolutely, it could happen again. I don't think we're at that point, though, that I'm going to start worrying about bank failures. And I don't think we're at that point. I'm just saying, why am I coming in and buying banks here when some of them, like a JP Morgan, let's put it in perspective. We're not that far off the all-time highs on JP Morgan. I mean, we're not that far off the all-time highs, even Goldman Sachs we are. Wells Fargo, Citigroup will never get there because they diluted it too much. But I mean, I don't see the value here that everybody else is saying. Maybe I see the value, but I don't see the safety that a lot of other people say. Because I think they could go down, but I don't think we're going into bank failure land. I don't think that.
I have one bank, and I'm thinking of getting rid of it this morning. Flagstar.
What's the symbol on that one?
FBC.
FBC.
Yeah.
Been a pretty good one, Joel. It's held up pretty well.
Yeah.
Look at that monthly.
I know. I'm scared. I got to get out. I'm going to get out.
I gotta get out. What do I have for U.S. banks? I'm trying to think if I have any. I have a couple Canadian ones because there's not much to invest in Canada, which is my whole Shopify argument.
Shopify, yeah.
Yeah, so there's just not a lot to invest in Canada besides big banks. And the Canadian banks are pretty conservative, although they definitely have some oil exposure. But I don't know if I have any U.S. banks.
I
think I have a little bit of XLF equivalent.
Yeah.
Which obviously a little bit of that, but I'd have to go look at my portfolio. But and like I said, I've got almost 100 stocks, I don't think I have any banks.
What's in the
not one U.S. bank?
What's in the
and they're cheap.
Canadian ETF? Is it maple syrup companies and Tim Hortons?
Maple syrup and banks and a lot of oil.
And a lot of oil is going on.
Oh yeah, the oil's a mess. That's what's really messed up. This is why Canada, if you bring up, I don't know what there's an EWC ETF. If you could look at that one. What's that? Look at EWC. That's your iShares Canada ETF, EWC. Look at it over the last 8 years. Flat.
Monthly chart on that.
Bring it up, monthly chart. So back in 2012, we were $28. We are now EWC $28. Yes, you collected a 2% dividend over that time, but in this bull run of the U.S. again, we were saying how much emerging markets have underperformed. Canada has massively underperformed. Why? It's full of oil.
I can tell you what else is. I can tell you what else is in that ETF. Cannabis, probably, or if not
probably
yet,
starting to become a piece of it.
Soon to
Let's
be.
go look. And we go under the hood into the EWC.
Well, the reason I bring that up though is because we had TLRY earnings yesterday after the close, and it was It was a mixed quarter for TLRY. They missed on the EPS, but they beat on the sales. So mixed quarter. Their sales were up tremendously on a year-over-year basis, as you would expect, like 300% or something. But that's the story on TLRY. Mixed report there.
Okay, we're going to go back to TLRY in 1 second because I have this fun under the hood segment going in EWC. So investing in Canada, your EWC, which is one of your big ETFs here, and there's a lot of other ones too, but they all hold the same stocks because there's no good stocks to invest in. I told you, it's banks and oil. So here's your top 10 holdings. Royal Bank of Canada, 8%. Toronto Dominion, 7.55%. Canadian National Railway, 4.6%. That would probably been a good one. That's CNI over here. So that's been a really good one. That's helped. Enbridge, so that's full of natural gas and obviously underperformed.
Polluting Michigan.
Bank of Nova Scotia, Bank of Montreal. So of your top 6 holdings, 4 are banks. Then you go into Suncor Energy. Obviously, energy stocks are a mess. TC Energy, I don't know if that trades over here or not. Brookfield Asset Management's another, financial management, like a I think it's like a smaller version of BlackRock.
BlackRock.
Canadian Pacific Railway, so that would probably be a good one. CIBC, Manulife, Nutrien, Barrick Gold's come back, and Shopify's made the list now. So Shopify is up to 2% because the stock keeps going up. It was probably at one time very small in there. It's gotten bigger. Canadian Natural Resources. So you can see it's all oil and all banks. That's what they got. They got one tech stock, Shopify. Tough to invest in.
All right, back to TLRY.
Oh boy, yikes! Go
You
ahead.
know, best of breed pot stocks and worst of breed pot stocks, and this is worst of breed. So I hope you didn't expect much because you're not getting it.
Well, it wasn't a bad report. Well, like I said, it was mixed. The EPS missed, the sales beat. Bottom line.
Bottom line, stock down 12%. Have fun with that. It's got some support. We'll tell you. Double up bottom 39.31. You know where I'm looking, Joel. I'm taking your
right there. Yep.
39.31, 39.50. What's it do through 40? Probably hit the stops through 40. Does it hold up at that 39.50 or does it just crater right through it? That's the question on Tilray. Other pot stocks are down in sympathy. I mean, Kronos had a pretty good quarter and it gave it back.
That day,
CGC has been trying. It had a good day yesterday, but it's giving it all back today. Aurora Cannabis, which I always liked. I had it for a while, but I've sold every pot stock now because I don't like the valuations. I don't like the competition. It's trading down in sympathy. Afria, which I think is just not the best stock in the world. I know people in Leamington don't like me saying that because that's where I was actually born, but I just, it was a great quarter for Afria, so we'll give them that, but it gave a lot of it back too. So I don't know. I just think the competition's coming.
S&P's down 41.75 here. We made a low at 28.86. So we haven't got from the intraday low from yesterday. That was 75.75. Your other low was 66.75 here, but man, it's going to be hard to sell this thing in the kisser here down 41 the handles, and that's what's probably going to be 400 or 500 points here. In the Dow, Dennis, you took away my technical analysis take here on Tilray. The thing is if you take out that 30, actually, where were those lows there? They were actually a little bit lower than 40. But when you get like this and you get these big moves, actually there was an exact double bottom at 38.70, Dennis. 40.55 was a low. We're trading right there. But like if someone comes in and just slams it and they hit those 40 stops, maybe throw a bid out there at 38.50 and get done at 38, just like that washout print. But I like 38.70, but not as much as I like 15.5 in Macy's.
And, Spinner is pointing out, and you did say 285 in earnings is going back to the Macy's. You think about that $2.85 and the dividend. How much is the dividend? It's 8.95% on $19. So I'm assuming it's actually, it's actually got some coverage there for it. So maybe I should take it back. It's not imminent cutting it, but I just think the story here is not good.
And we talk about, if you buy a stock with a 10% dividend, you got 10% protection, right? Well, if you've been owning this stock and you're getting an 8-9% dividend, your principal's down 13%. So
today.
Today. Yeah.
Tough. There's safer spots to be buying. Some of these REITs, okay, let's be honest here. I mean, okay, maybe the REITs are a little bit of an issue because they're mall REITs, but I mean, there's a lot of other REITs out there that are yielding 6, 7, 8, 9%. And you've got an interest rate environment that the yields are going down. Maybe some of these REITs are still pretty good. I mean, I don't know. What are your thoughts on the REITs?
You're talking.
Stay away from the mall REITs like Taliban or Topman. Stay away from those ones, I would say. But there's definitely got to be some other ones.
The world is, according to the inverted yield curve, right? The world is going.
Shouldn't that stuff be really in favor?
Right. I look out my window here. I don't know what. Maybe I'm just getting a false sense of reality here with what's going on in Detroit, and maybe we're just late to the party here. But there ain't no recession going on here.
I don't see a recession.
I don't either. But I mean, I don't know, Spencer.
Really, I just still argue the tech stocks look good. The tech stocks still look good. I just argue the banks look terrible, and obviously the oil stocks look terrible. Those are the two sectors of awfulness. So, but, I mean, your consumer staples have held up very well. I mean, obviously,
People got to brush their teeth.
Most of them.
very well.
Most
I
of
still
them.
think there's a lot of companies that are out there that are pretty good. So maybe we should start focusing on those. That's what you buy on the pullbacks. Get your shopping list out. I like First Solar.
Okay. All right. Imbalances on a day like this.
They're small. You know what? They're small. So this actually sometimes is a tell. They could grow. I mean, it's very early. We're an hour before the open, but General Electric 73,000 to sell. GE giving it all back here. You know what though?
Oh, you made a good call yesterday.
Next 2 days, fill the gap. Maybe get a shot down here in the low nines. I don't mind that. Stopping out at the, I set it up for you yesterday, that trade, 895 stop out point. It had a pretty good run. Pulling back here again. He did get that CEO buy. That might help the stock. So let's see what it does. I think it's going to fill the gap maybe down because you really have an ugly day here. Get down 910, fill the gap a little bit, maybe take a shot.
Yeah, I mean, it's
I'm not trying to call the bottom, but I kind of am.
Mr. Market kind of helped out yesterday as well too.
Oh, for sure.
Yeah.
That was just an explode. It helped everything out yesterday.
Right.
Anything. Anyways, I'm just looking through here and I don't see a lot of huge sell imbalances, which makes me feel a little bit more, not bullish this market, but we've seen this before. If you're coming in here and selling when you're 350 Dow points down, it's been wrong. It's been wrong to chase the moves. This market has punished the chasers. That's what this market does. And you're chasing that move yesterday saying, okay, that's it. We're going back to the highs. You're immediately punished. Day before, if you're chasing the sell-off and saying, okay, yeah, we're in trouble here, I'm going to short it, you're in trouble. So then the days, the play has been when we're down 350, 400, 500 points, the play has been to buy it. When we're up 400 or 500 points, the play has been to sell it. Fade trade still in. I'm going to keep saying where you got a lot of chop going forward, a lot of unknowns in the overall market. I'm still playing the fade trade.
Yeah, Dennis, if you could look at my sheet here and it's just like, it's just all 1 stars. There's just nothing. There's nothing in between. Like these, you saw what we did yesterday, the way we ripped up. When you go through an area fast on the upside, you come back fast on the downside. So,
Yeah.
you know, if anything, we need to stabilize. We need to get back to, 15, 20, 25 point ranges, get into some tradable patterns here. But as long as you have this, I don't follow the VIX, I just follow the SPOOs. I mean, until you can at least calm down a little bit, it's going to be hard for this market to rally. And the other thing too about yesterday, and I don't know how many weeks ago, I'll have to look at the S&P here, but before we had that huge down day, we settled at 2932.50. That was on the Friday. And then the next day we lost, 98 handles, snapback rally a couple days. And yesterday we settled right at that number. And I can't get that out of my head. So I don't think we're really out of the woods here until we can settle back above 2930. And now our people are thinking, oh my God, I missed 2930 again. I'm bringing my offers down to, 2,900, or offers are coming way down now. But anyways, the next number on the downside, before we go to our guest here, we have the intraday low from yesterday at 2875.75. Your true low from yesterday on the Globex 24-hour market was 2866.75. So that's another good 20 handles away. So Spencer, we didn't cover a whole lot of stocks during the first part, but we definitely got some good market commentary.
Yeah, that's true. You know what though? There aren't a ton of individual
There's
movers.
Goose. We didn't get to the Goose.
Well, we'll get to Goose after the guest, and there was Luckin Coffee as well. We had a short report on Overstock. We'll get to all that after the guest, but let's bring on today's guest now. His name is Jake Wujastyk. He's from TrendSpider. He joined the show for the first time a couple months ago. He's joining us again to break down some charts for us and show us some cool types of charts at the moment. So, Jake, are you with us? Good morning.
Yes, good morning. Can you hear me and see me?
I can hear you and see you. How's it going?
Going fantastic. Thank you so much for having me on again. Second time. I'm honored.
All right, so we've got your charts up on the screen here, or at least I can see them. Show us what are we looking at here exactly?
All right, so we have SPY on the chart. We've actually got a split chart, both daily candles. And what I wanted to show here was a couple things. So on the left side, we've got the daily raindrop candle, which is something pretty new to TrendSpider. And what you could see yesterday, which was kind of an interesting little fake out for me, especially, is you could see a lot of the volume aggregating at the top of yesterday's range. So for example, this is what's called a raindrop candle. You can see that there's one half to this and a second half. And essentially you've got your volume profile for the first half of the day and the second half of the day. So you can see a lot of that volume profile yesterday was really at the top of this range. And we even tried to bounce through the EMA 50 here, which has been resistance 1, 2, 3 times before we kind of broke down through here in early August. And so we actually did, look a little decent yesterday. Even the MACD, you can see here, anytime that we really started to curl in this general area, when I kind of bring the chart out here, where these arrows are, you'll see that there's been a decent bottom here. But I mean, the candle hasn't formed today because it's pre-market and raindrops don't work on pre-market. But I mean, this is looking pretty ugly, whatever the candle looks like today if we just continue down. So, from the raindrop side of things, complete fake out yesterday. On the regular candle side of things, you can see on the downside, we've got really 2 main areas that I'm personally watching. And that's one, this dashed line, which is actually the EMA 50 from the weekly candle overlaid on the daily price action. So you can see how this is one, when we broke out, this was really kind of the status quo changer when we bottomed back in December, finally broke out, pulled back, found support, and then haven't really broken down through this area since. So you've got the dash line, which is the EMA 50, and then you've got the anchored VWAP, the Alpha Trends anchored VWAP here from the bottom. So we have been doing some work with Brian Shannon, and we do have the anchored VWAP in here now. So that's something I'm really watching as well. Pretty much anchored right at the bottom from the 24th. And you can see we really haven't broken down through that area yet. So I was listening in before. It sounded like you guys were not fully bearish, but there's a couple things that may be a little iffy. So this would be my area to watch. If this broke down, that would really be interesting to see if this is going to continue. So that's the daily. We'll kind of see what happens at the end of the day, but I know you guys were kind of bringing up maybe the long side of SPY, and maybe we're close to, I don't want to say a top, but we're getting kind of some interesting measurements or indicators, if you will, on some of these bank stocks and oil stocks. And I just wanted to bring up the weekly chart here real quick. And this is a weekly chart, monthly chart of SPY. And you can see, I mean, anytime we've had this type of divergence, and essentially the divergence is simply the prices finding higher highs, relative strengths finding lower lows. I mean, you can see that this literally lasted for years, this divergence. So it can also last a longer time here, which is what we're seeing. We're seeing these higher highs, lower highs on the RSI. So, we've had this set up before where if we just broke out, you can see anytime we had this green square, that's when this negative divergence kind of didn't materialize anymore. It failed. So can this easily happen? Yes. So what I'm really looking for on the longer term side of things is if the RSI can break through this resistance area. And if it can't, that's going to be interesting for the next couple months. And, we'll just have to see what happens. But I think this is definitely something that's worth watching and kind of seeing how this materializes.
All right, so going back to that last chart you showed with the raindrop, what are the advantages of knowing when in the day that it's showing the daily volume, right, spread throughout the day? Is that right?
Correct.
So what are the advantages of knowing that?
So it gives you the idea of kind of how volume is flowing. So let me give you a cool example of this on the Qs. So what it's telling us is kind of telling us where volume is aggregating. And so on the Qs, this is a cool example. Let me just clean this up a little bit. But if we go back to really when we were on this move down back in December and October, all that good stuff, you can see a cool example of how you could really utilize the raindrop here. So I'm just going to draw a trend line here, just kind of connecting a couple points. So I'm going to connect this point to this point. And you can see here, we've got this point, we've got 3 points, and we've got another area that tried to break out. And then we finally have our breakout area here. So a cool thing that you can use with raindrops is notice during this candle, you can see that there was some volume profile during the first half of the period. Anytime you've got this kind of squiggly line, it means there's volume there. So we had a little bit of volume that initially had this false breakout. You can see that there was, slight volume, not a ton, in the first half of the day. During the second half of the day, you can see here that there is no volume profile above this line. We can see all of that volume was really focused at the bottom of the range, and then we had our continuation down afterwards. So you can see that there's not a lot of volume that, you know, poked its head above this line. Go back to January 30th, and we can see the breakout, and you can see something a little different. You can see now that the volume, there's actually a decent chunk of volume above this line. So you can see the volume starting to aggregate at the top of the high of this day. So in this case, if we kind of split the screen here and just do a hollow candle example and compare these, you'll see that the wick was actually below that line. So, you know, this was a cool example of saying, all right, well, you know, the wick was above this line, but we didn't break out of it. But we look here and we can see that volume, there was decent volume above that line. And so that was a good example of showing how volume was starting to really pick up above this crucial area. Does that make a little more sense?
Yeah, it does. On our show, we like to cover a lot of stocks that are moving, that have news on it and earnings. So today we started at the top of the show with Macy's. So could you apply your technical analysis, your TrendSpider? Tell us what you're looking for in Macy's today.
Sure. What is Macy's ticker? I actually don't even follow Macy's that much.
M.
Just M? All right.
No one follows Macy's. That's the point.
No one goes to Macy's.
I was going to say, I haven't heard that name in a while. That kind of is like the name I associate with JCPenney, which I haven't also heard in a long time. So, yeah, I mean, talk about a gap down and a half. You know, if I want to just quickly apply some trend lines here, just to kind of get a general idea of what we're seeing, you know, clearly very much in a downtrend. So what's cool about this is the system really just kind of drew a bunch of lines based on some preferences. So we can go and kind of clean this up a little bit. But you'll see here that, you know, we definitely just broke down through a pretty crucial level here. I'm assuming the 1938 is not the price range we're at this morning. So what are we at right now?
It's currently trading around 1680.
1680. So yeah, I mean, right now, you know, this whole area is completely taken out. So it'll be interesting to see if this line holds. Based on yesterday's candle, you didn't the raindrop. You just saw kind of a bunch of volume kind of in the middle of this range. One thing I want to show you guys is the reason why we got this this red candle is essentially because you can see these two little bars. This is the VWAP for the left side, which is the first half of the period. And this is the VWAP for the second half of the period. So the second half of the period's VWAP is really a function of the color. So anytime this area is below the first half, it's red. Anytime you've got the VWAP for the second half of the period above the first half, it's green. And then you've got these guys, these blue candles, which are pretty sweet. They are essentially when the VWAP equals exactly the same thing on both halves. And this is a really cool indicator for volatility. Not always directional volatility, but generally, you know, volatility in the sense that you're going to have some type of move. For example, like Netflix, this is a great example of kind of showing this here. But essentially,
that was a tough one. Let me give you an easier one because it had the big news on it. How about we talked about, you know, Apple, and we talked about, you know, the bank stocks. We talked negative, and Dennis made some really good points about Apple. The debt they took on was the debt that to finance the buybacks and everything. Big day update yesterday. Give us some back today. So traded down 492, not giving back all yesterday's gains. This one might be a little easier. Can you give us some levels or tell us what you're going to be looking at in Apple today?
So Apple, I mean, you know, yesterday we've got what we call this balloon breakout type deal, very similar to what we saw on SPY. So you can see yesterday, a lot of that volume was near the top of this, the price range. So for me, you know, I'm not sure what Apple's doing pre-market, but, you know, for me, I think this balloon was kind of a fake out across the whole market. If you look at SPY, if you look at the Qs, it all had this similar shape. So for me, I think it was kind of a fake out here, maybe I don't want to say a short squeeze, but like you guys were mentioning, this is such a headline tweet driven market that sometimes, these technical setups and even these candles right now can tell you one thing, but then you wake up in the morning and all of a sudden you've got a whole different kind of status quo you're dealing with, if you will. So for me, naturally I would want to look at this general kind of line to hold. And I do like to use horizontal lines as well. So if we did kind of move this over, I would want to see definitely the 192s hold. But as far as the candle goes yesterday, this would be like my textbook breakout candle for a stock. But, as I mentioned, news trumps charts a lot of the time, and pardon the pun on that, but, the tweets definitely also don't help. So, kind of gyration. And with that, these candles can only tell you so much. They can really only just tell you where the volume's flowing throughout the day. So that's really how I use it, just seeing where the volume's flowing.
And with regards to that, does that apply to intraday charts too, or is it just for a daily chart in hindsight?
Oh, intraday as well. So we can go anywhere from 10-minute to daily. So you can check out these different raindrop charts on the 10-minute, on the 30-minute, whatever you'd like. Right. For me personally, since they are aggregated with 1-minute data, generally with the higher time frames, you're going to get a more kind of granular look at the volume. Like sometimes the shorter term time frames are a little clunkier, but I'm generally a swing trader, right? So I'm not rarely looking at the intraday unless I'm really just trying to see if there's some divergence, negative or positive, that I need to see before making a buy or sell. But for me, I generally will stay on the daily, but you can go all the way down to 10-minute. Once we get brokerage data, you'll be able to go down to the 1-minute candle.
All right, Jake Wujastyk is with TrendSpider, showing us some unique charts we haven't seen before. Jake, thanks for the time today, and have a good rest of your week.
Thank you so much. Thank you guys so much for having me, and have a great one.
All right, thanks, Jake.
See ya.
Right.
Bye.
S&P showing some stability here, I guess. If you were down 41 handles here at 28.91, just kind of hanging here. We got a low at 86, nothing there. Monday's close 28.80. And I mentioned those intraday lows, 75.75 on Tuesday. Your true low is 28.66.75. All right, Spencer, we did a lot of broad coverage here. We didn't have a ton of earnings, but
we have two more.
Sure, let's go.
Well, the goose is loose. The Q1 EPS, this is a 21 Canadian cents, down from a 15 or a 21-cent loss, excuse me, down from a 15-cent loss a year ago. Sales of 71 million Canadian dollars, up from 44 million last year. So losing money on the bottom line, but increasing sales for Canada Goose.
$40, just call it 40. Has to hold that. Yesterday's low 40.47. How does it respond there? Does it hold that level? I didn't look what it was doing pre-market. There was somebody who was trying to sell us last night. This was trading down ahead of the print, 2 points last night. So they're right, but it's not really getting hit very much.
Yeah, it's not like the last report, where you might be licking your chops,
I remember last report lost like $15.
Right.
So straddle buyers here. I believe the expected move was upwards of 13 or 14% on this. So straddle buyers not happy with this move this morning.
Yeah, I see that $40 level that you're talking about, a couple lows in that area. I'll give it, actually, I see an exact double bottom at 39.62 if you're so inclined to trade double bottoms. Below that, another pair of lows right at 39. So let's see. We'll see what happens. Pre-market low. Let me adjust my chart here. We're trading down. Pre-market low is right here, right now. I don't know. Someone has a bid out there. Dennis, what's the market? Pre-market low is 39.70, and it just looks like we're
Let's see what it does with that.
Yeah.
Write that number down. Can that hold in the regular session?
Okay. Right.
I'm not in love with this story either. It's a retailer, and I don't like any of retailers.
And they're those codes. First of all, they're very, very expensive. And second of all, have you ever tried one on or had one on?
No.
I mean, it's like a sauna. It's like
that's what you want in Canada when it's cold out.
Yeah. Okay. I don't know.
Not in Florida, maybe.
Yeah,
Global warming, not good for Goose.
it's not good. It's just a really warm coat. Dana has one; she loves it. But I mean, it's the kind of coat that you put on, and then let's say you're
Sweating immediately.
driving, you can't even have it on in the car. It's so warm. And then you take it off, and you
Well,
lose.
that's their angle, warmth.
Okay, go. All right.
All right. The other one was HUYA from last night.
Well, there's HUYA, we had YY, and we had
Those cover up together.
We had a Luckin Coffee this morning. HUYA,
so we got lots of earnings.
HUYA, 11-cent EPS versus an 8-cent estimate. Sales of 292 versus 256 million dollars for HUYA. So a beat and a beat on that report. We also had a YY. They had a miss on the EPS and a beat on the sales. So a mixed report for YY, better report for HUYA.
Look at HUYA and look what it did last night. And it's the victim of the market here this morning. If this market was flat, this thing would be up $2 still. Reporting kind of on the right night, but not the right day. So obviously it's given it all back here. So I don't know what to say about that. I mean, stock is all back. It's all due to the overall market because this was holding up very well last night. So stock's still an overall downtrend. Obviously, there's still sellers. It got near that 23 resistance from before and failed there. So now it doesn't look good at all.
I think if you try, if you like the report, you're saying it's trading up, I'd, maybe try and buy it at unchanged at 21.33. That's flat on the session. I wouldn't fall in love and wait for yesterday's low at 20.58. But I think if it's going to bounce, if it's going to return back into the 22, I don't know about the 23 handle, you're going to hold that close, not sneak under 21 and turn around and curl back up. YY. That is trading down right near the lows of the session. What's that trading down? 214. Boom. 51.06. No, pre-market low 50.96. So let's call 51. What was the low of the move? Former low of the move. 51. Couple days in a row. So, man, if you want this thing, hold 51. Got a chance to rally, but trading
clear downtrend, leaking already. I think it's below 50 today. I'll make a bet on that if you want.
Okay. All right.
Okay, just ignore that. No bet.
Okay. What?
Okay, so and then
YY.
I just did YY.
Oh, HUYA. Sorry.
We did HUYA and YY. What's the other one?
Luckin Coffee.
Luckin Coffee.
Yeah, LK. 48-cent loss EPS versus a 43-cent loss estimate. Sales of 132 versus $130 million. So sales miss. I'm sorry, EPS miss. Sales beat for LK.
Seems to be miserably failing up at that 26. I mean, it got up there multiple times. It's where it opened on its first day of trading. Or it opened at 25, ramped 25.96. You got up there, you retested. Yes, we got up to 27.11, 26.97. So many highs, just over 26. This looks like it's in trouble to me. I think rallies to be sold in LK.
This is the Starbucks of China, right?
Correct.
Okay. All right. Down 215. I think it's been doing compared to some of these other stocks, Chinese stocks. I think it's holding up.
Okay.
It is. I mean, it's IPO, got the IPO love. 21.89 is your pre-market low. That coincides very nicely with your low at 21.80 from August 7th. So 60 cents above that. I think I would be a natural buyer to cover a short 21.80 to 22. If I have to chase it on the upswing, I wouldn't want to do that. But I don't know. This kind of feels like, people have been shorting it since the middle of August. They're getting a little bit reprieve here. Also that 21.80 low. No, that's the big one. 21.80, 22. That's the support in Luckin Coffee, or is it Lucky Coffee?
Lucky would have been better.
Yeah, Lucky Coffee.
Sorry.
If it was Lucky, maybe I'd be bullish, but it's Luckin. I'm bearish.
Yeah, you were also bearish
here. Imbalances are slowly growing, but you know what? They're not growing fast enough. That's what makes me think we're starting to slowly rally here. It's amazing, and S&P traders completely ignore the stocks. Some of them do anyways, and I think it's a mistake because this market actually sometimes the stocks can lead. And on days like this, when the S&P futures are all over the place, the Arabs and the traders who are looking for a little bit of indication from the stocks. I'm not seeing a huge amount of selling pressure and from an imbalance perspective. Now, the stocks are all trading way down. So one of two things is going to happen. These imbalances are going to grow substantially in the next 35 minutes, the sell imbalances, or the market's going to start to rally back a little bit. So I've kind of just, I'm just playing it. I'm hedged right now, so I'm not really playing it either way. But if I was, I'd be a little more inclined to buy the SPY pullback here right now, just for the open, than dumping it on the open.
Let's take a look here. Let's just do, before we go, I know we had some few ratings changes. Probably the most popular stock, the most questions that we get, and this is the in the YouTube chat, is Roku. And
Is it up today?
no, it's
it's down. It's down.
It's the
You
story.
know what though? That was a little bit of an ugly candle for yesterday, and I actually had been taking it home overnight the last couple of nights just because it seems like it opens up every day. I did not take it home last night for the simple reason is that I didn't like that candle. And it kind of felt like a little bit of a reversal day for it yesterday, didn't it? I mean, you had the run off the first 20 minutes, maybe a little blow off top, and then it closed fairly weak. On a day that the market was very, very strong, Roku was not strong yesterday. That was the first sign of relative weakness from it. So maybe it needs to cool off a little bit. I mean, it closed up $1. Yes, it was still closed higher, but from where it was early in the day, it actually looked kind of weak. So I think it needs to cool off for a bit.
It did have a tired candle yesterday as at good volume too, 135.33 with the close. I don't know. People have been asking about this, and I've just kind of been saying I haven't been trying to pick a top, but Adler's boy, what's he say? Put guys on Roku is an option. I don't know because they're going to be really expensive. I'm just trying to look at this as a perspective. I'm not trying to short it, but I own it long. I would be under that 2-day low at 129.43. I mean, anything can happen, but to me, you take out that 129.43, you're still giving yourself $3 of room here on the decline. And the reason I picked that number is because the next day's low was 121.54. So I just don't think people are going to be really stepping up to the plate here and buying it if it cuts through 129.43. So that's what I'm looking at here in Roku.
All right, as far as ratings, a bunch of ratings changes today to CBS and Viacom. That's to be expected with their merger. So there's some upgrades, there's some downgrades, but all that pales into comparison to the actual merger itself. So we won't highlight that too much. Ferrari catching an upgrade this morning, race from Goldman Sachs from neutral to buy. What else did I see this morning from ratings land? Advanced Auto Parts, right? AAP caught a downgrade from Guggenheim to neutral. That was probably one of the bigger downgrades of the morning. So Advanced Auto Parts and with the downgrade, and Ferrari with the upgrade at Goldman Sachs.
Yeah.
And it's trading down at, someone said, how about shorting the TLT? And I'm just like, where, why? You have backed up. Yeah, you could short it now at 144.86. Just be aware, your pre-market high was above 146. So if you want to, that's all you're basing it on here is that, okay, well, maybe the high's in, you short it here, you risk $1.20, and then what your downside is. Maybe you wait for it to trade the 10-15 minutes and see what kind of range it establishes there, and then maybe take it out. Also, someone was talking about Roku puts, and for the short term here, if I could get like a 50% bounce from basically what did it have yesterday? It had 134, 8-4-point move. If this got up to like 138, 139, then I think I'd maybe try and short into it and lean on the 142.10 high. But man, haven't made a lot of money shorting this in the hole. All right. Spencer, anything you want to add here? Welcome back, Spencer. I'm sorry you had to take the time off this week, but we're glad to have you back.
Yep, good to be back. I'll be back in the office on Monday, but I'll be with you guys remotely the rest of the week. Want to thank our guest today, Jake Wujastyk. Thanks to all of you in our chats. Please remember all the information from our show is meant to be used as informational purposes only, not for investing or trading advice. Any questions, comments, concerns, email us at premarket@benzinga.com. On behalf of Joel and Dennis, everyone have a good rest of your day. We will see you on Thursday.